Francesca, what a morning to have you on the programme. Never mind Q3, can we just sit on the first month of Q4 just for a moment? What are you seeing in the business with the challenges that the rest of Europe is facing right now and what Ireland has been facing for the last month or so?
Sure. Well, it is a mixed bag. There's some good signs, but there's also a lot of uncertainty and some negativity. Ireland is 2 weeks into a 6-week increase in restrictions. So it's not a full lockdown. Non-essential retail is closed and people are staying within a close perimeter of their home. But schools are open, construction and manufacturing are open, and banking as an essential service is obviously helping our customers during a period of uncertainty. We've seen consumer optimism be at an all-time low, which is not surprising. And that's because of the uncertainty both of increased restrictions in Ireland, but also, of course, the uncertainty of Brexit. On the other hand, we've seen GDP data come out stronger than many people were expecting. And that, I think, reflects the sort of international nature of the Irish economy. And also, we're seeing that house prices and the housing market, which is a really important part of Ireland's GDP, being surprisingly resilient. We're the largest lender to the Irish economy. We lend to about 40%. We have relationships with about 40% of businesses and households. And that gives us really good insights. There was some optimism, I think, as we came out of summer. Now there's a lot of uncertainty, but the economy so far is showing a high level of resilience.
Francesca, what we've seen in the UK is some banks in England tightening lending standards. We heard from the ECB yesterday that they're seeing a similar theme across the continent. Are you tightening lending standards at the Bank of Ireland, Francesca?
So we want to lend, and we would have been prudent and fairly conservative in our lending practices before COVID. We would be supporting a government £2 billion capital guarantee scheme. We'd be looking to support businesses. And also amongst mortgages, we've actually seen a significant increase in lending. So there isn't a significant tightening of our lending standards. We've made emergency liquidity available to customers during the period of payment breaks, which we have seen across the UK and Europe, and we were a key player and contributor towards that. But we continue to want to lend to support our customers, whether those are households or businesses, through every single stage of the pandemic.
Good morning, Francesca. What are you seeing in terms of bankruptcies as economies are shutting down? In the United States, some of these bankruptcies are set to surpass what we saw in 2009 during the depths of the financial crisis.
So we're providing a trading update today as part of our third quarter results. We're not seeing any material change in what we would call our stage 3 impairment. So we were very explicit in our interim results about the outlook, and we continue to see behaviour very much in line with our expectations. So we would have had a lot of customers on payment breaks. They are increasingly coming off payment breaks and resuming their capital and interest repayments. So we're saying to customers, contact us. We're being proactive in contacting customers. Obviously, the sectors that rely on a lot of social contacts, so hospitality, are bearing the brunt of this crisis and are being very impacted. Other parts of the economy, though, the indigenous sector here in Ireland, some of the retail and manufacturing is actually adapting much better to this level of restriction than maybe at the beginning when it caught everyone by surprise. And of course, in Ireland, you've got 10 out of 10 of the largest pharmaceutical companies in the world based here. You've got 9 out of 10 of fintechs and 8 out of 10 of the biggest banks in the world having a base here. And that element of multinational, and we bank 2 out of 3 of all FDI investment in the country, is helping with the resilience of the Irish economy.
And I just want to ask you about cost cuts. You did have 1,400 cost cuts you wanted to get rid of in terms of layoffs. As Jonathan and I have been talking about, it's a very grim morning for Europe. We're not even in November. Ireland already has very strict lockdowns. Do you plan on more layoffs and more cost cuts?
So what we're reporting today is a successful implementation of a voluntary redundancy scheme. So we would have seen an acceptance level amongst colleagues, and it was voluntary, and there were enhanced terms that will help us reduce our staff costs by 14% over the next couple of years. So that's, I think, a really fair proposition to our colleagues, but also of value to our shareholders. The payback on that redundancy program has been very good. This is independent of COVID. There'll be fewer people working in banking in the future than in the past because of automation, digitization, and changes in the way customers choose to engage with banks. And that COVID has arguably accelerated some of that shift to digital. but this isn't COVID-related redundancies, and they have been voluntary. And we've been on a multi-year trajectory of improving our efficiency. So we would have taken about 10% of our cost base out in the last 2.5 years, and that will continue. And we stay focused on that strategic objective independently of COVID.